avoiding real estate risk. I talk to a lot of people who are concerned about an eventual market downturn. I always rail against those videos on YouTube and Instagram, markets crashing, Chicken Little. This is about big picture thinking, not just here in Boston. We're considering long-term trends in real estate everywhere. And as far as tips for navigating the real estate market, I believe in this wholeheartedly. So we're in an all-time seller's market, which naturally you would think that means it's not a good time to buy. Well, when you think about property value, I want you to think about it in this context, and it stands the test of time. In the short term, a couple years, we don't know what to expect in housing, home values. We don't know. However, in the long term, real estate values absolutely trend upward. So with that established, if you can buy the home today that you'll live in for the next 20 plus years, I realize not everybody can make that call today, we know the value will go up dramatically. People often reference the Great Recession. So to put that in perspective, as it relates to home values anyway, so they hit a high point in 2007, precipitous drop after that. Hopefully I can throw a graphic up here, I'm kind of an idiot. And of course, values were back up to those 2007 highs by roughly 2013, 2014. So, that is a once in a lifetime event, and it took, 6-7 years to bounce back. If you've been paying attention to our social media, I'm actually pretty conservative with money. This isn't your generic Instagram snake oil. It's a little bit more aggressive, but it might make sense for you, And if it sounds like a cavalier approach to the financials of home ownership, let's talk about it, because what I'm trying to illustrate is a strategy. We're trying to find ways to beat the market dynamics today. This is one. So, if you can buy your forever home, if you're at a point in your life where you can make that big decision, you should not have concerns about a market downturn at all. Then it becomes just about the monthly payment and living expenses. So can you make it? Can you make it, especially at first when you have less equity, can you make it, or are you overextending yourself right away? When you're negotiating buying a car, a depreciating asset, what's the advice you get? Negotiate purchase price, not payments. It's not about the monthly payment, it's about the loan to value. You hate to be underwater on an auto loan. Now in this situation, buying your forever home, I would argue, LTV and purchase price still absolutely matter, but it's about the monthly payment. It's about, can you buy your forever home and still have enough money to go out to dinner? Because we know, realistically, the value is going up over a 20-year span. Of course, it's very easy for me to say this to you. Go out and buy your forever home in the most expensive market ever. It sounds overly aggressive. You could punch holes in it all day as far as stuff like opportunity cost and everything. But what I'm trying to do is show you real strategies for buying in this market, the thought process. I think, the thing that I get asked the most today is just, is it a good time to buy? Would you buy in this market? And I say yes, but really the answer is more about your personal situation, right? Not even just financials, your plans, your timeline, your plans for the house itself. So more tips and videos coming about buying in this market specifically. Thanks for watching. Have a great day.